Okay, we're back with another episode of Expandable. And if you were with us on the last episode, we talked about investing in your team. Right now, we want to talk about investing in your business. And this is going to be more of a financial bent. So there's lots of things to invest in, as you grow your company. I want to start with, something that a lesson I had to kind of learn the hard way personally is, especially if you're early on, you're new, your startup or a small business, or this is maybe one of your first times running a company. Maybe you bought a company, however you entered into this. It's really easy to take money out and spend it on yourself or your family or, personal goals and not let that build.
It is.
That's a discipline, but it's also a very, it's a difficult thing to do because whenever you're having success, you want to reward yourself. Nothing wrong with that. But early on, it needs to take time and let it build to get the real reward that won't come if you continue to take money out.
I mean, now I've been banking career 22 years, and I have seen so many successful businesses that happened to. Mm-hmm. They were successful for 10, 15 years.
Yeah.
Now they have to upgrade, whether it be their equipment, whether it be their building, whether it be whatever infrastructure.
Yep.
But they have no retained earnings.
Yeah, there's nothing there.
They took it all out. They spent it. They just feel like the cash flow was coming forever. And now, wait a second, you go get financing, you go to put money down and, look at it and say, well, okay, well, revenue's there, but you have retained nothing.
Mm-hmm. And I think a practical way to do this is to stay focused. It's, again, a discipline. It's a hard thing to do, but I can speak from personal experience. As an entrepreneur, I'm an opportunist, and I can see opportunity everywhere. I drive down the road, I see so many arbitrages that are just there, which makes me wonder, maybe people just don't see it the way I see it, but wonder how people are don't have work or can't make money. It's like there's so many opportunities to make money.
Absolutely. I mean, one I drove by the other day that just blew my mind was behind a restaurant, a buffet restaurant style, one that I cared to go frequent anyways, but everybody drives by it because it's in between, major anchor store shopping centers.
Right.
And just out back, how nasty the garbage area was, overflowing, where all the employees had to do was cut the boxes and flatten, and just nasty and stuff everywhere. You couldn't pay me to eat at that location.
Yeah. Unfortunately, most restaurants are like that. But it's funny. Another opportunity. You just gave me one. I mean, goes to the point. I'm going to wrap this up. I'm going to come back to why I'm saying to focus. Is because this is how I think a lot of entrepreneurs are. You get after something. You're in your business. You're making money, and you get distracted. Right there is an opportunity for that restaurant and or any restaurant to say, we're going to clean it up and we're going to make it like the front of our restaurant.
While the people are out there smoking.
And then what we're going to do is we're going to make a marketing campaign to say, come in through our back door because we want you to see how clean we keep our restaurant. Do you think that sales are going to go up? Yes. Yeah. Because what they're going to do is they're going to walk in that back door and they're going to look left and right. And they're going to be like, I'm never eating there again. Yeah. I'm never eating there again. And a lot of people locally choose based on location. You just upped your customer base, right? So
absolutely.
So it's like there's so many opportunities. That's such a simple thing. You're putting yourself in the shoes of the customer. It's great, right? You were the customer in that case. But it's so easy to get distracted. Staying focused on the primary opportunity and growing that, building systems behind it, and really committing to it. One of the best ways to do that is to keep the money in there, keep the money behind those ideas, not the ones that are peripheral.
Yeah.
So it's a huge thing. I mean,
well, in general too, and you got to explain it. So I think we're starting to get a culture shift. We've had employees that say, hey, I directly made the company $200,000. I make $75,000. I want to make $150,000. And you're like, okay, well, what if there's a year where you don't make that? Mm-hmm. The economy drops off.
Yeah. What if you don't make anything?
Then if I don't save that, am I going to then take back your salary? Mm-hmm. No, employers don't want to do that. They don't want to move you up and then take salary down. No, you don't want to do that.
No, they always want to keep moving forward.
So look, that money aside is there. So when something does bad happen, because inevitably something will, there is going to be something that impacts your business at some time in your history. Everybody is one vote away from their business going on and nearly being crippled. So you've got to be able to have reserves and to be able to pivot if necessary and be able to take care of your employees during that downturn.
Yeah.
And that should make a difference in their mindset and at least give them peace that, you know what? Yeah, we have a looming recession that I don't know will hit, when it hits, or how bad it'll affect. But my employer has got my back. We're good.
That's right.
We're stable, and I'm not. We can write it out, and I'm not going to let go.
Yeah, people going back to the team thing, they can get comfortable in their role. They can be fulfilled in it. They can own it, which means usually exponential output from each individual person. If they know, hey, my employer is doing the right things, it's game over. I mean, any other competition that's not, you're going to take that business too. And I love that perspective. It's kind of a risk mitigation perspective on the sustainability side. I think that's, kind of A1. The other way to look at it would be for opportunities, right? So just my second point you perfectly made is that you want to keep the money in the business because you want to have reserves for down cycles, but you also want to have the money for the up cycles or maybe even during the down cycles to invest in new things like those other rabbit trail ideas that you had that are still sticking around.
In the lending world, when the economy's going well, everybody wants to loan out money. Rates are low. Here you go. Yeah. But then everybody's doing it. Your rate of return is not going to be as high. Then in the environments where cash is tight.
Right.
Then the people that have the availability to invest in, that's when they really multiply 10x in a less risky fashion than they were when the good economy.
Right. I mean, I don't know the restaurant business, but I like that you brought that up as an analogy.
Yeah.
I don't know this business, but I can only, assume the financials and margins, people and food costs is a big cost for those businesses. And if they were, how many restaurants, as much as restaurants have an extra, let's say $3,000 to $5,000 that they can throw at an opportunity like we're talking about, where you gussy up your whole back, you make it your front.
I don't even know. And some of it, it's like, well, the downtime, get a pressure washer, have them pressure wash the filth off the back of your building.
But I'm saying if there's an opportunity, okay, we've acknowledged this is a problem. We don't want rats. We don't want all the stuff. We want to fix the problem, but we want to turn it in. We see an opportunity here. Well, it's going to take an investment of money. Okay, we're going to tile. We're going to pressure wash. We're going to get rid of the dumpsters and rent a spot where you can put the dumpsters or whatever.
Close down for 3 hours, something.
Right. It's going to cost you
all
money.
Hands on deck.
And I'm saying on the low side, $5,000. How many small businesses like that have an extra $5,000 that they can just invest in something that might have a return? I'm thinking very many, because they run so thin and they spend the money out the back door that comes in the front door. So that's correct. I think that's a primary reason why a lot of small businesses don't grow, because they don't manage their money so particularly that they're planning with their money.
And then I see businesses where, it's like you can't get blood out of turnip. That old saying, whereas it was started by an individual, and as the family grew, and now they started adding other family members to it. Each one of the family members has a sense of ownership. That's right. They grew up in it. So then now maybe that family member has a family. But sometimes that one location, that one restaurant can't support now, household of 4, then, get 15, 20 years down the line. Now, how can it support 4 households of 4?
That's right.
Ultimately to cover all of that, the expenses.
Yeah. It might not be.
No, because every location doesn't mean it's not profitable for that. So then that's having tough, okay, now it's time for,
we need to open a second location.
Second location, another brand.
Other family member.
Yes.
But it takes vision. It takes planning. It takes a mindset of, hey, what are we doing? But where is this going?
But if they took all the money out as they were growing of that and reaction, then they won't have the money to invest in the second restaurant, the second business to expand.
Yeah. Or the potential down cycle of that second restaurant. I think a lot of small business owners, they get locked into operating and just making sure the wheels don't come off, that they don't spend enough time thinking about, well, okay, what if the wheels do come off, and what are we going to do then? And what if other opportunities come around the corner? What are we going to do then? That's what this whole thing is for, is a mindset of investing in your business, is sitting down maybe once a quarter and looking ahead and saying, okay, what path are we on? What have we had to overcome? What's coming that we can see that maybe we can't see? What are the opportunities? Time and time again, you hear stories of entrepreneurs that are wealthy and they become wealthy through owning businesses. Is they were ready when the opportunity came.
Correct.
I think Mark Cuban talks about keeping most of his money in cash. This was years ago, so I don't know if it's the same now, but he is a proponent of keeping things in cash. Why? Because he understands that one of the best ways to generate wealth is through ownership in a company, whether he starts it or owns the whole thing or whatever.
Correct.
But if you have cash, you now get the best deal and you can instantly purchase, which is, if the deal's on the table, it's time to make a deal. The deal might go off the table tomorrow.
I mean, that's exactly why our model and our ratios, we carry higher liquidity.
Mm-hmm.
We have higher, assets that we can convert to cash a lot simpler.
Yeah.
A higher percentage of our assets are in cash than
it also
99% of the banks.
It also gives you freedom to operate your business. So a customer comes in, they have a bad experience or something that was out of your control. Now you want to make it right. Well, that you have reserves. You could tap into $1,000, $5,000 and make it right without having to go to lawsuits, without having to, get out of control or be on the defensive, right? But if you don't have that money, well, you're automatically on the defensive because you don't want to go into money that you don't have to make this right.
Yes.
So there's so many great things that come out of just the mindset of preparing for the future, both positive and negative, and having those reserves. One thing we mentioned in the last episode was hiring slow and firing fast. Mention it again. It's really important because if you have one bad apple come in, they can ruin the whole bunch, which costs you those reserves, even if you are having those reserves. So,
and a lot of business owners don't quite know that it costs that because they're used to X amount of dollars going on payroll every month.
Yeah.
And, they're thinking, oh my goodness, if I let that person go, I've got to either step in, I've got to do this. So they're in fear constantly of not letting that. But yes, money's gone. It's not allocated.
That's right.
And it gets you in the short run, whether you realize it or not too.
Yeah. This has been good. Anything else to add?
No, I mean, I could keep talking about this, the whole situations with invest in your business going forward. I see it a lot in the banking area. I see when things are going a bustling economy. A year ago, 2 years ago, I would see super regional banks. They were giving some rates that were quite low and fixed for long duration. And, rates went up. Where are they now? But ultimately, even those rates that they gave lower during that time, if that company needs growth in a recession, well, that bank's not going to be there for them.
That's right.
So it was very, narrow-sided. And so I'm thankful that it, been through recessions, that it wasn't, you kind of lead it up, wasn't chasing, because the worst thing that could happen sometimes is selling products at a loss or selling products to devalue your market at a lower margin. Like,
that's right. Yep.
Sometimes you got to make that tough decisions not to make that extra buck that day.
Yeah.
To, have stability and be there in the future.
Yeah. I think if I were to wrap this up, just succinctly, it's operate on the offensive, not the defensive. Yes. The more you have the mindset of being defensive about your business, you don't do the prudent things that you need to do financially or with managing people or managing everything across the board. If you are, and it's a really hard thing to do. I mean, it's really easy to sit here and say, but I can tell you my personal experience is the nature is to be defensive and to mitigate risk, which there's merit in that. But by being on the offensive, sometimes you end up mitigating risk along with playing the offense.
Yes.
In reserves is one specific thing to point to that. But being on the offensive, being dreaming a little bit, having a vision for where you're taking things, again, but focused, is can help you become the leader, the CEO, the company that you really have in mind, versus always trying to get less, do less, spend less, hire and pay less, or hire less people. Like, there are places for efficiency in growth that give you growth, and it's a beautiful thing, but efficiency is not everything. I wouldn't even say what I'm talking about is not really an inefficiency mindset. It's more of a defensive, like a past looking mindset versus a future looking mindset.
Got it.
Cool. Good. All right. See you on the next one.